What's up, money magnets and master traders? It's your Uncle Charters here, and the SPY is looking like it's trying to put in a lower high. Why do I say that? Well, first and foremost, we have a two candle pattern here, a potential two candle pattern looking like a dark cloud cover candle. For those who are unsure, Uncle Googled dark cloud cover candle and it gave me all these images. And you can see an example here what a dark cloud cover candle is. Big body green candle followed by a red candle. It's smaller, but it closed below 50% of that body. Here's another example right here where it explains it, where it closed below 50%, and today's SPY pretty much closed below 50% of that green candle. That is a dark cloud cover candle. Second thing is how it closed below my 5 daily moving average and my 20 daily moving average. Now I use the 5 daily moving average to help me gauge the market in the short term on if it's bullish or bearish or not, but the 20 daily moving average is a whole nother monster. It's more medium term, and we closed below that as well. Multiple reasons to be bearish. It closed the gap today and then it pulled back, guys. The price action, the behavior itself is also bearish. Could it be bullish tomorrow? Absolutely. And I'm going to give you guys the levels to watch out for in case the SPY decides to switch back to being bullish. But right now it is looking bearish. And for the SPY to stay bearish, a couple of levels must hold as resistance. The first level that must hold as resistance is 628 and then 630. I also had a fib level at 631.5. It was a beautiful trading day today in the morning. If we look at the 15-minute chart, we can see this beautiful drop to the downside. We broke down my 631.5 level on the first candle. Second candle, we broke down my 630 level, and I wrote it in the Discord. 631.5 and 630 are first support. If these levels fails, pullback time with 628, 626, and 624 or lower in play. It was nice. Lost 631.5 on the 15-minute chart. We lost 630 on the 15-minute chart. Gave us a nice drop down to a little lower than 628. Unfortunately, for the rest of the day, the SPY decided to bear flag here, but we didn't get much of anything that happened besides that nice drop in the morning. So that was unfortunate. One really good move. The rest of the day, it was in the chop phase, bear flag, and wasn't sure what it wanted to do. But like I said, we look on the daily chart, it still looks bearish to me. And as long as below the 630 level, as long as below the 628 level, Uncle does favor more downside. Now I mentioned the dark cloud cover candle. The low of this red candle is at 627. We'll know more downside is incoming if we're below that 627. We break it down. I do have a fib level at 626.3. That is one of my targets. So if we can break it down, I would definitely favor a lot more downside. As I mentioned, SPY's potentially putting in a lower high. So if this is a downtrend, we're either going to head back to the previous low in the 620 to the 618 zone, or we head down to a lower low, which means we could potentially head even lower than 618. So the bear case scenario for tomorrow, if we're below 628 and 630 highest, we break down 626.3. That's bearish follow through. We should head down a lot lower to a previous low or to a lower low. Now, if we are to be bullish, and we do have to be prepared for that, 628 must clear and 630 must clear. Those are the first step bulls must take to help get the price back above those two moving average, the 20 and the 5. And then we have the 631.5 Fibonacci level. Strong selling pressure from that area this morning. If we can clear that level, the dark cloud cover candle will be invalidated. If it's invalidated, no reason to be bearish, and we can favor some more upside up to 634, 636 or higher, possibly back up to new all-time highs. I wouldn't be surprised if we hit 640. All right, so moving on to Triple Q. Triple Q also has a dark cloud cover candle, although its red candle's a lot bigger than SPY's red candle. So it looks pretty bearish. It was strong selling pressure, lost the 5 and the 20 daily moving average. If we're below 560 tomorrow, a lot more downside can come. 558, 556.5, 555, 553, and 551.5 would be in play. That is a strong sell zone that we had in this last month. So I am bearish on Triple Q as long as below 563 highest. And if we break down 560 and 558, that should bearish follow through. But if we are to get a bounce, I will trust no bounce unless 561.5, well 560, 561.5, and of course the fib level at 563 can recapture. I would feel more comfortable saying I'm bullish again if we can recapture 563 as well as clear 566. If we can clear 566, we will be bullish. We'll be above all moving averages again, and the dark cloud cover candle will be invalidated, putting us back on track to retest all-time highs. Here is is Tesla just chopping away. Unfortunately, the levels are still the same. 309.3 is resistant. 312 is resistant. I need to see a close above 312. Getting back above the 5 daily moving average. All that happy stuff. And that could possibly put 320.5 or higher in play. I wouldn't be surprised if we cleared 312 and we actually broke through 320.5. I would not be surprised. However, technically speaking, we closed below 309.3 and we closed below that 5 daily moving average. So despite the lack of volatility right now, it still is overall bearish. If it can show some bearish follow through for tomorrow, breaking down 306, 304.5, 303, 300, those are my support levels. They break down, more downside incoming. 295.5 is definitely a big target of mine and a Fibonacci level that I'm watching to the downside, but only possible we can stay below 309.3 and break down 306 and 303. Definitely could break below 300. I'm not bullish unless we are above 309.3 and the 312 sell zone. NVDA inside candle setup, 180 down to 174.5 is the range. So from here, I have resistance at 178 and 180. If we clear those levels, we break out the mother candles high and we should head up to new all-time highs. Now, if we're below 178 and we break down 176.3 and 174.5, we break down those levels, more downside incoming. I would be bearish below 174.5 because that is a breakdown of the mother candles low. I would be bear biased in favor of $5 to $10 move to the downside. Here is coin continuing to look bearish, although it is a bit far extended from the 5 daily moving average. Makes me worry a little bit. It broke down a critical level. It was an inside candle setup. It broke down the mother candles low. So despite how overextended it is to the downside, still bearish. And right now, next support is at 297. If 297 fails, 295, 293, 291.7, and 290 are targets of mine to the downside. I cannot favor a bounce unless 300, 302, 304, and 305.5 can recapture to put 308, 310 or higher in play. I would favor a bigger bounce above 310. That will put 313. There is a gap around 318 in play, and if we break those levels, possibly we go back test that 5 DMA, which is pretty far up there. Another $15 to $20 move to the upside would back test it if we can clear those levels that I mentioned. Otherwise, still looking bearish. If we lose 297 and 295, more downside incoming. Here is IWM. Now, while SPY and QQQ is looking bearish with their dark cloud, IWM does not have one, which is interesting. IWM just doing its own thing. And if it continue to do its own thing and be bullish, 221.5 must clear tomorrow to put 224 or higher and play above 224. I am bull biased. But if this bounce, if this rally is going to end, maybe it's just a relief rally, we don't know. But for us to truly know, support must fail. 220 and 218 fails. If they do, 216.8 and 215 incoming. Those support levels fail, we'll know that the rally is over. And last but certainly not least, here is the VIX. Candle's getting a bit smaller, but the breakout still intact, and VIX is still closing above its own 5 daily moving average. So still looking bullish. We'll see if it can do something tomorrow. Resistance at 18.6. I want an 18.6 and 20. Those levels can clear. We are bullish. Now to invalidate the breakout and make the VIX look bearish again, 17.5 and 16 must fail. Those levels fail. False breakout setup on the VIX. Let's hope it does not happen because we want the VIX to go up so we can have lots of volatility to trade in the market. But no matter what happens, always remember that you are a money magnet. Peace.